Hello everyone out there in tax land, Dan, the tax man here. Listen, taxes don't have to be hard. Here we take complex tax subjects and we make them simple because we want the average person to understand, to benefit, and to save money. Today I'm going to be talking about a brand new tax credit available for the 2021 filing season. It's the credit for sick and family leave for self-employed individuals. If you were self-employed in 2020 and missed any time due to the COVID-19 pandemic, listen up. I'm going to give you all the details about this credit, which could be worth thousands on your 2020 tax return. Stay tuned. Now, the credit for sick and family leave for self-employed individuals is one of the many tax credits that has come out this year designed to help struggling taxpayers affected by the pandemic. Let me give you some of the qualifications. First, you have to have a history of being self-employed. You can't have started your business in 2020 and expect to qualify for this credit. It's got to be a bit of a history there. Next, you have to have been unable to perform your work duties in 2020 between April 1st and December 31st because of COVID, either because of a federal, state, or local quarantine or isolation order, or advice from a healthcare professional that you should self-quarantine, or you have to have been experiencing COVID symptoms. Now, the purpose of this credit is, in effect, to pay you for up to 10 days of lost earnings due to COVID-19, capping at $511 per day over those 10 days. Now, in computing the actual amount of the credit, the IRS uses your net earnings from self-employment or $511 per day, whichever is lower. The more you earn, the higher your credit. And if 2020 was not a very good year and 2019 was, you can elect to use your 2019 earnings for purposes of calculating the credit. And again, the more you earned, the bigger your credit will be. There's also a version of this credit available if you were unable to work because you had to care for a son or daughter age 17 or younger whose school or daycare was closed due to COVID-19. And this version of the credit is designed to pay you for up to 50 days, capped out at $200 per day. Now, in computing the actual amount of the credit, the IRS is going to use the lower of your net earnings from self-employment or $200 per day. But again, in general, the more you earn, the higher your credit will be, and you are allowed to elect to use your 2019 income rather than your 2020 if 2019 was a better year for you. And you got to remember one thing about this credit. You can't double dip. The 10 days that you use that you were subject to COVID-19 and unable to work cannot be the same days that you're counting for the up to 50 days of having to care for your child age 17 or younger because their school was closed. There's also good news out there for everyone who's self-employed and has an ITIN. Unlike the stimulus, you do not need a social security number to qualify for this credit. If you're self-employed and you lost money last year because you couldn't work because you were sick with COVID or because you had to care for your kids whose school closed due to COVID, this credit might be a great way to replace at least some of the income that you lost. Listen, this is going to be a crazy tax filing season with tons of different credits flying around. I want to make sure that you get 100% of the money that you deserve. So don't leave it to chance. Call me and the rest of my A+ rated with the Better Business Bureau team at Community Tax. Phone number 800-424-8332. Or if you're a Spanish speaker, give us a call at 888-523-6606. If you like this video, give us a like, give us a subscribe so you can make sure that you stay up to date on all the latest tax news and information. I am Dan, the tax man, tax professional with Community Tax, and I will see you next time.